The S&P 500 faces critical test as support needs to hold. I'm your host, Steven Van Metre, and thanks for joining me for part one of the Sunday Chart Show. We're going to kick this show off with the S&P 500 and look at the breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average. Remember, when they're above their 50-day, it's considered a bullish trend, and 55% of them are there. But the trend is slowing, and we see breadth weakening and heading down to potentially this 40% range. And all that means is right now, 55% of the S&P is above its 50-day moving average. 45% is below. So 45% is in a bearish trend. We see it rallied up here into about a little over 70%. That plus one standard deviation, it said it was likely to rally up there, and it got rejected. And so what that's telling you is parts of the S&P 500 is slipping back into a bearish downtrend and looking like it's probably going to get down here into this 40% range, because we've seen it get down here so many times, suggesting that there's some downward price movement headed for the S&P. Now, how about we zoom out a little bit to the 200-day moving average? And well, when you look at this, when it's above this, it means it is in a bull market. Below, it's in a bear market. It's roughly 50-50 at 49% above. And we can see this rally did get up here to where it has gotten before at around 57 to 60% out of that bear market into a bull market, but that didn't last as stocks slipped back below their 200-day moving average, suggesting again we're going to see this 40% number on both the ones over their 50-day and over the 200-day. And historically, when we see a deep move off of the breadth on the 200-day around 35%, it went back here and looked at a couple other points where this happened. We see some rallies, they get rejected. We see some rallies again, they get rejected, and finally a bottom form, suggesting that the S&P is likely to pull back here. Let's take a look at the relative strength indicator, a momentum indicator, and it needs to be above 40 to show positive momentum. Is sitting at 51 right now, so that's a positive trend. It did rally up, did not get to overbought condition, got near that, and is still hanging out. And as long as it stays, around this 50 range, that's a good sign for the RSI. But if it continues to slide, well, the breadth indicator is going to indicate that perhaps indeed we're going to see the S&P come down, face that critical test of support. How about the moving average crossover divergence, the MACD? What we're looking for now is the black line to stay above the red line, the black line being the MACD, and it has crossed over. That is negative divergence. Now, we've seen this before, and an uptrend where a crossover is almost meaningless, just created a little bit of price volatility before it went higher. And of course, we see another place where trend was actually falling and it broke down. So this is again another kind of point along with the breadth indicator suggesting the price for the S&P likely to come down. How about momentum time probe? Now remember, the version 6.2 takes a look at three indicators. It looks at the RSI over 40, the MACD with a positive cross, and its own internal indicator. Has to have two positives out of two of those three to get a buy signal. Still holding that as of Friday. You got to sign up. Link in the corner and the description below. Why it is still free, I don't know, but you got to get on the list to get the discounted version whenever I get around to it going paid. Let's take a look at the longer term indicators. And we see the S&P 500 now slipping below its 9-day moving average. Not really a big deal. It's been rejected as 100-day. We'll look at that. We now see the price on the 100-day moving average turning bearish. Momentum across all the moving averages is starting to slow down and head lower. Let's take a look at the price chart and see where this critical test is at for the S&P. And now I want you to notice here this tan line. This is the 200-day moving average. Price now facing rejection there 3 times. Looking at the 100-day, which has been a source of resistance, it broke through there, but just didn't get very far above that before pulling down. But what is the test here is this 50-day moving average. Now rallies start with a cross of the 50-day, and what you want to see is it bottom out and start to head higher. It really needs to hold here, and it doesn't have much downside move to find out if it's going to. There's a lot of volume support below that, breaks down, and now you're going to see SPY go from 440 and retest its lows around 420. So that's the big test right now, is facing the S&P to see if this rising 50-day moving average is indeed going to be bullish, or is momentum saying that the rate of change on this moving average curve is slowing, and that's going to be a bearish picture. Let's on the NASDAQ and now see if it gives us any different perspective on where perhaps the S&P is going. And what we see here, the percentage of the NASDAQ 100 above their 50-day moving average is sliding down. It's below 50. It's at 45%. So we can see, positions in the NASDAQ, the underlying stocks, 55% of them are now headed into a bearish trend. And it rallied up here. We kind of said this was likely to happen. It was going to rally up here to about 70%. Price did not get as high as we were kind of hoping it might, but still got within that range we identified. But breadth is indeed weakening and suggesting that it's coming back down to perhaps a 30 to 45% above their 50-day moving average, looking where the buyers may come back in. How about we zoom out to the 200-day moving average, and tech stocks are just in a bearish picture. We see almost 70% of the NASDAQ 100 in a bear market. It's sitting at a spot where it's found buyers before, so maybe price comes down a little bit around this 14,000 range, and that's where you might see buyers make another attempt at this. But breadth very, very weak on tech. And looking at the historicals, when we see moves down here into the 25% to 30% of the NASDAQ 100 above their 200-day moving average, we go back to look at, say, 2015, 2016, we see that there's moves higher, they get rejected, and sometimes you can rally up and get rejected again. We look over here. So it's telling us that, a move lower here could be constructive to validating a bottom, perhaps somewhere even low as 13,000. Let's take a look at the momentum indicators. The RSI is holding at around 47, but the trend breadth is weakening on this. You see our momentum is weakening on this, not a positive sign. It never really got to overbought conditions or even that close to it. How about the MACD? It's got a negative divergence. It's crossed to the downside. Again, is this telling us that the trend now is going to move lower? And it starts to look like it because prices are already falling, and we can see when we've got those crosses to the downside that pushes price lower. Momentum Timer Pro, as of Friday, still holding 17 consecutive buy signals. How long that will last? Probably not much longer. So again, sign up, get your next report on Monday morning at 6 a.m. Pacific, 9 a.m. Eastern. Let's take a look at the longer term pictures. Moving averages on the 21-day and 50 remain bullish, even though price has now fallen below them. So that starts to be a red flag that, of course, the breadth indicators have already been alerting. And you can see, hey, it's below all the key moving averages here. 3 and 6 month momentum remain negative. So price is below where it was back then. Let's go and take a look at QQQ here, and it's a wholly different picture than the S&P 500 because the S&P rallied up beyond this. And look at this. This is what you want to see in terms of a bearish picture. You have a cross now through all the moving averages, but note the 100-day seems to be a big point of overhead resistance. Comes back up, tags a downward trending 100-day moving average right at the volume profile. Price gets rejected there, gets rejected at the 200-day moving average, is now trying to hold support at the 50-day, which remains a critical juncture. Failure here, and of course now the QQQ is coming down to this 340 range where you see this volume picking out, and then after that it kind of just drops off into space because over the last 6 months not as many shares traded there. So sellers clearly above, noting that the bulls don't know why these big players are getting out. How about we move on to small caps? They tend to lead the large caps, and so we'll see what the Russell 2000 is telling us. We look at the percentage of the Russell 2000 above its 50-day moving average, and that's at 35%. So 65% are in a bearish trend. They're headed lower. That's not a good sign, but we've seen, in the past, it get rejected when there's around 30% of the Russell 2000 above its 50-day moving average, perhaps suggesting that the price comes down a little bit more, maybe around, say, this 1950 where we've seen buyers come in before, that may just be enough to trigger it. How about we zoom out to those over the 200-day moving average, and the picture gets worse. It's telling us now, you look at this, it says 27% above their 200-day moving average, and price is a little bit higher than where it was when we saw this level before, suggesting that a smaller number of the Russell 2000 is holding up the entire index, and this is very weak, suggesting that if buyers do not show up around 1950, there could be big problems in store for the small caps. Let's take a zoom out to the bigger picture. And this doesn't really give us a lot of insight, but historically it does indicate that we should actually see the percentage of Russell 2000 stocks above their 200-day moving average perhaps get below 20% if it cannot hold at this level. And that would be, again, very bearish for the overall stock market. How about the RSI sitting at 42, needs to remain above 40. Will it be able to hold there? That is the question. It never really got any momentum behind it. Did finally get above 40, but price just didn't follow through. Again, putting mark at that 1950 number. How about the MACD? Again, the negative crossover, suggesting, again, price coming down. How about Momentum Timer Pro? As of 2 days ago, hit a sell signal. So I said, hey, look, this is not where you want to be. Maybe wait till it flips back and tries to catch a wave back higher. But for now, it's telling you it's out. And how about the Russell 2000 on the longer term indicators? 21-day and 50-day moving averages remain bullish. 100-day moving average still bearish, below all the key moving averages. That's not good. 3, 6, 9, 12-month momentum, all negative. Not good signs at all. Let's go take a look at IWM here and see what we've got going on. And yeah, the picture here is not that good at all. So looking back over the last 2 years, you can see price well below where it was. Buyers have come in around, this is around that 1950 level here, but on IWM, that's about 193. Buyers came in, they tried to break the trend, got rejected. Now, the way you read this is above here, between these two purple lines, this was a sell zone. Below here was a buy zone. How do you know? Before, previously, price gets down, buyers come in. Price gets up here, sellers come in. Now, what happens is when you break through a supply zone, people that had bought up in here, when price gets near it, will turn into sellers because they don't believe, their conviction goes away. Now, notably here, you see the 100-day moving average acting as resistance. The 50-day moving average didn't even offer any type of resistance as price just gapped right below it and is heading lower. So we see IWM needs to hold 193, failure to hold here, and now you're still looking at filling that gap all the way back to November of 2020, and that's where you start to pick up some price support there. All right, let's take a look at the high yield bond market, because of all things, junk tends to tell you where everything else is going, and we see it fell below the critical 40 number on the relative strength indicator. So momentum is slowing in high yield bonds for sure. Let's look at the MACD, negative crossover, and that's not good. Notice the price is zeroing in on its recent low set back here around March 14. And Momentum Timer Pro, I'll tell you what it'll say, because 2 of the 3 you just saw are negative, but you'll sign up for the report, you'll see where it's at. And the bigger picture, well, it's ugly. Price on all the moving averages, bearish, momentum bearish, below all the key moving averages. Everything here is not what you want, particularly if you're bullish on the major indices. And let's zoom over here to HYZ and look how, or HYG, I think I said Z. You see it's at 80. The recent low here was just a 79. And this is probably the biggest warning sign of the markets. And we zoom out and you can see that it is at a critical juncture. The failure here, since HYG is heading down to 76, maybe zips us into a massive liquidity crisis. And it is literally right on the edge of a cliff. And that, my friends, is not good. But anyways, with that, I'm Steve Van Metre. Appreciate you taking time to watch. We'll see you soon for part 2 of the Sunday Chart Show, where we've got miners, metals, bonds, and dollars coming at you. Bye now.